Hi, my name is Brett Bonecutter with Monarch Capital Home Loans, and today I wanted to talk to you a little bit about how mortgage rates are quoted. There can be a lot of confusion among consumers about the way this works, and in fact, one of the most frequent questions I get is whether or not I can give someone the best rate. And that's a tricky question, because if what somebody means by that is that the best rate is the lowest rate, that may not be true. Because the lowest rate is almost always going to be the most expensive, at least over the near term. And so when we want to try to find what the best rate is for you, we have to keep that in mind. Now, to illustrate this, we've got an example of a rate sheet for a 30-year fixed loan. And what you're going to see is a range of rates available and some pricing next to it. And we're going to start with 4.125 because in this example, that's what we would call par. Now, what you have to realize is that in the background, Wall Street is funding these loans. And as you might imagine, they want a higher rate because that gives them a higher rate of return, and they're willing to pay for it. However, if you want a rate that's below market, they want you to pay for it. The par rate is the rate at which we receive no compensation for that particular rate, and you pay no particular discount points or other charges for getting a rate that's under market. If you want to be more aggressive than 4.125% and go to 4%, you can, but as you can see, you're going to pay discount points or really some prepaid or forward interest before the loan even starts to get that below market rate. And you're going to pay that in addition to your other costs and fees, which illustrates what we were talking about earlier, which is that the lowest rate is not necessarily the best rate because it can become the most expensive rate of all. Now, the opposite of these is taking higher rates where we have what's called rebate pricing. And that's where, again, Wall Street is compensating us extra because the rate's slightly higher. The advantage to that is we can take those monies and apply it to your closing costs, lowering the relative cost of the loan. And this all becomes very important if, for example, you don't think you're going to be in the loan very long. And in fact, most people are in 30-year fixed loans no longer than 5 to 7 years. So generally speaking, it doesn't pay off to take the lowest rate, and that's why the lowest rate is not necessarily the best rate. So why is this all important? Because knowledge is power. You can definitely have the option to buy the rate down and get, if you will, the lowest rate. But you have to understand it may be the most expensive rate. It may not be the best rate. At Monarch Capital, our job is to come alongside you and help you understand those options so that you come out with what is the best rate for your situation. Our consultants are standing by. We appreciate your time watching this video. If you have any questions, don't hesitate to reach out. Take care.